In this tutorial, I'll be showing you about Payx stock. I'll just copy that and paste it because even I don't know the name of it. So there are many stocks I don't know the name of it because I'm very new to this field as well. So it's very easy to copy the symbol and paste it and see the name. So it's Paychex and it's payroll services company. On the right hand side is the information from Wikipedia, and on the left hand side is from Google. And if I want to buy the stock right now, I have to pay 84.60 US dollars for it to buy right now. And if I want to know when was it founded, I can see from Wikipedia 1971. And if it doesn't show, if for you it doesn't show at outside, you can just go to Wikipedia and you just see this box, and you can just see 1971. And then I'll just show you one more thing. I'll show you the ratios that we need to calculate that are very important. We don't need to calculate that because it's already done for us. It's in macro trend. I've left the link in the description of this video. And please, if you have any questions for me, please do ask. I'll be very happy to answer. And it will be like, I'm just learning myself, so it will be very learning good experience for both of us. So you can please ask any questions if you want. Just click on price book ratios, and type in the or paste in the symbol and make sure the name is same. And then I'll just explain briefly what this is. um, the book value is the real worth of this share, and the stock price is the market value of the share. For example, if the book value is $1, that means that the stock or the share, the real worth of the share is $1. But if the market value is $2, that means that you are paying $2 to buy something that is $1 worth. So you're buying it very expensive. So price book ratio, you need to make sure that if it's less than 1, then you're getting the stock at bargain at a discount, and it's ideal situation to buy that time. If it's 1, that means that you're paying the same price uh, as the worth of the stock is. So you're not getting it expensive, but you're not also getting it cheap. It's the same price. And if it's more than 1, then you're paying more price for that. So you're buying expensive stock. The higher the number goes, the more expensive it gets. So right now it's 11.7. So somebody who's buying right now the stock, they are paying 11.7 times more money. So it's more expensive. 11 times, nearly 12 times more expensive stock they will be buying right now. But if they bought it in 2009 February, they would be buying 4.14 times more expensive. So it's 4.14 times more expensive stock. And so that time still it was more expensive. But so if you just see vertically up, it was 3.69 was the book value, which means that's the real worth. But somebody who bought that time, they paid 15.26 to buy something that was only $3.69 worth. So they paid nearly four times the amount to buy something that was only 3.69 times worth. But still, right now, it's 11 times more expensive. So it means that the real worth is 11 times less than what they will be buying. So let's look at other ratios. Current ratio is very important because it tells that if the assets are more than liabilities. If the current ratio is less than 1, that means that it's very dangerous. It's very risky stock because liabilities are more than assets. If it's 1, that means that liabilities are equal to assets. But ideally, we're looking at the stock, we're looking to invest where there's very less risk. There's no risk, there's good margin of safety. It's 1.5 or more than that. If it's 1.5 or more than that, then it's ideal for us to buy. It's 1.17. That means that it's a very risky stock because even though the assets are more than liabilities, you can just see vertically up as well. Even though assets are more than liabilities, still there's very less margin of safety. We are looking for 1.5 for it to be very safe. Let's go back. It's 1.11, very less margin of safety. 1.23, very less margin of safety. And let's see the trend of it being, so it has never been 1.5 or above than that. So it has never been less than 1, which is a good thing. It means that assets has always been more than liabilities, but we have never been able to get a margin of safety. So it has always been risky stock. So that's the point. Let's look at debt equity. This ratio tells us if the firm is operating mainly on debt or equity. If it's operating mainly on long-term debt, then it's not it's a risky stock. If it's operating mainly on equity, then it's very good stock. There's a margin of safety. We are looking for zero point 0.5 or less than that. Right now it's zero point 0.3, which means that's brilliant. It's less than zero point 0.5, and there's a lot of margin of safety, even though they have the long-term debt. But equity is a lot more than long-term debt. So um, if I just go back, it's 0.31, and the previous they haven't taken any debt. So they have just recently taken debt in 2019 February, but still it's less than zero point 0.5. So it is very good. Margin of safety is really good. Let's look at return on equity. It should be 8% or more than that. um, 8% or more than that for it to be very brilliant. Right now it's 41%, which is a lot more than 8%. Then if I just go back, and it's always been more than 8%. It's always been more than 8%. So that's brilliant. So it's good, giving brilliant results, and that's really nice. And let's look if this dog pays if it pays any dividends. So I just typed in the symbol, and yes, it does pay dividend. If a stock pays dividend, it's 2.93%, which is a very little percentage. If some stock pays dividend, that means that they are able to cover their costs, operational costs, and everything. They are able to pay back their creditors, but still they have money left. So that money is called dividend, which they pay to their shareholders. That's extra money. So if some firm is able to pay the dividend or extra money, that means that they are doing financially very good because they are able to pay extra money. So they're doing very good financially. Now let's look at, I want to show you uh, what the employees think about it. So let's look at Indeed Reviews, which is a brilliant website. Um, and I'll click there. And it has 1.3k reviews, which is brilliant. 1300 reviews. That's amazing quantity. And it's 3.7, which means that it's nearly 4. So it's very good. It reflects a very good thing because it's 1300 people thinks that it's 3.7 stars, which is brilliant. So let's have a look at Glassdoor, what employees says about this in Glassdoor. I'll just click here, and it tells that we have nearly 2200 reviews, which is a lot, and it's 3.9, which is nearly 4 star. So it means that the employees are quite happy with this because it reflects that, and that's brilliant for the firm. It tells a lot about the firm. Let's look at Yahoo Finance and look at the key executives of this firm, the top key executives or people who are very important for this firm. The symbol is that, and I'll click on profile, and I just show you one thing. Sector is industrials, industry is business services, and full-time employees. It should have that information. Maybe it's because Yahoo Finance might not have covered it, or I don't know why it's not written here, but it should have that. Maybe it's not loading. But these are the key executives or the main people in the firm, and they have all shown their salaries, which is brilliant because the more transparent it is, the better it is to form a trust with the firm, and it has shown all their salaries, which is brilliant. Now let's look at Justia Patents and see if they have any patents. I have left the link there, and you can have a look. And now that's I'm not sure if that's the same one as not, because I'm not sure. BAY. Which one is it? Time and attendance inc. I'm not sure that if that's the same name, the assignee, that's the same name as this one or not, or that's a different one. Then I need to search on that. So Otherwise, if that's not the one, then because the name is different, so I need to search on that. But if that's not the one, then it's a different. There's no patent for this firm. So and one more thing, if I want to know it's a billion company or million company, I can just see from Google market cap billion company. So it means it's a big size firm. What else? Yeah, just that.